I'll start with the picture that Jemana was outlining for us, which is a picture not just of supply constraint in the energy markets, but supply actually being taken off the table. Is crude pricing in that reality?
Good morning, Tom. I've struggled to see that we actually are, because this basically just all points to higher for longer. Even if there was a ceasefire tomorrow and the strait was reopened, we're hearing about these damages to infrastructure. We're also seeing shut-ins from wells that cannot just like turning on a tap in your kitchen. It will take time to get that supply back. So higher for longer seems to be the risk right now. And the question is, as you say, does a Brent crude price here just above $100 really reflect that properly? It may do, because obviously we at the same time seen this massive divergence in between refined products and Brent. So obviously the refineries are trying to get as much crude they can, but they're also obviously reaping very high rewards because the product market is as tight as it is, and that's really where we should continue to focus to get any sense of what the economic impact will be of this.
Where can the world turn to get those refined products now that much of that is shut out of the Middle East?
Well, that is a big question. Probably not really anywhere. I would say maybe apart from Russia, but that will make some. That will trigger some additional changes. Because right now we all know that the barrels that comes out of the ground in the Middle East is perfect for the middle distillates. That's really what we're missing right now. We cannot get that from the U.S., which is mostly gasoline. So we are incredibly dependent on the Middle East for this source of supply. Not only for the raw, for the crude oil, but clearly also for the refined products, which with the Middle East having become increasingly a refinery hub in the last decade.
Ole, you mentioned Russia. The US has obviously changed its sanction stance on Russia, at least in the short term, and in a very specific way related to the energy or the product that is on the water. We're now seeing a wider drawdown of some of that product that has been floating around on the water for quite a while. Are you factoring in a change in European stance with regards to Russia, or is that just a step too far, do you think?
I think that would be a step too far right now, but even the removal, potentially, well, temporary removal of sanctions, is really just putting a small band-aid on a massive wound. It's not really going to heal anything. It may just ease a little bit of the tightness, but luckily we can say we came into this conflict with a massive amount of crude oil stored at sea, which can be shipped around, and we're seeing those inventories starting to come down. We're just waiting for the next weekly update, which you guys will put out sometime this morning from Vortexa, but that has helped alleviate some of the initial pressure. But as those barrels start to come onshore and be refined, then the question is really where are we going to find the next barrel from if this $10 million barrel a day disruption continues.